Guys, this will be my third stock analysis, and like I said yesterday, the next stock we're going to be looking at is the Cato Corporation, ticker symbol Cato. It's a $109 million market cap. It does pay a huge dividend. I honestly think they'll get rid of it. I mean, they could keep paying it, but I think they will. All right, guys, let's get right into the video. Ready? We got the 10K. Guys, remember I'm doing quick analysis, so it's like we're just looking at the balance sheet and looking at the assets and then getting our fair value from that. Lease life, okay. So total assets. I got it, so I'm going to put it to the side and just copy like in my last videos. Let's see. Alrighty, so let's put these current assets down. We have obviously cash. Look at that. I looked at the stock before because usually I try to see before I actually do the analysis. What is it? But this stock looks really interesting if it gets to a certain price that merchandise and Tories. I'm just copying everything down right now. Tories, prepaid expenses, and other current assets. Okay. And then we want to do total. Alrighty. Now let's start writing these down. I usually do pen and paper, so if my last videos I kind of look a little slow with Excel, I usually just do pen and paper. But if it's a discounted cash flow model that to do, I do it on Excel because it would be really hard to do on paper. Obviously, that'd be kind of dumb. Alrighty, let's stop yapping. All right, so now we got all them down. Everything's down. So let's go. So obviously, cash and cash equivalents. We're gonna leave that. Let's see exactly what are these short-term investments. Let's go check. Let's just not do that. Let's do investments. Maybe we might get more hits on that. Let's see. They should have them listed. In my last video, I saw that I went like directly past one of the accounts receivable thing. I'm like, oh my god, dude. Where is it? Okay, just blah blah blah. It's just oh. Oh, so they're just the total other assets. Okay, 25 million. See all those things, assets held for sale, land held for investment. Okay, those are all great. I wonder what now this company I would honestly this might be a deep value play. I wonder what assets and land they own. Because this is pretty this could be pretty huge. Damn, where okay, there's PP&E. Where the hell is the oh, here we go. Our short-term investments are primarily comprised of investments in federal, state, municipal, and corporate debt securities. Okay, so it's just invested in, so it's, I'm gonna guess, let's see. I wish they would say exactly what it is, but, I mean, they kind of did there, but I don't, okay. Alrighty, well, I'm fine with that. So it's mostly, so we're not gonna discount that at all. So I'm gonna leave it the same. Restricted cash, or we're going to leave that the same. And then let's see these accounts receivables. Let's see who owes them the accounts receivables. Okay. It probably mostly it looks like. Yeah, most likely if it's like this, like company. Oh, here we go. I think this is. Oh, okay. So this is what we get. I think that. So we found this. I think this is their cash and their short-term invest. Okay, so now we get an idea. Um, all right. So it's mostly in corporate bonds and stuff like that. Um, that's fine. I mean, shoot, if you have cash and you're not really getting a good return, or your company is not investing in new stores and it's just sitting there. I mean, I'd rather have them invest the money and get some sort of return on it. One company I was looking at, what's its name? Uh, Copart. They have like 2.5 billion worth of cash on their balance sheet, and they were taking it and investing in treasury bills, which is huge when you have that amount of money. Why am I having trouble? Sometimes you just got to look at customers. Okay, let's see. Okay, so this could be just people purchasing stuff on credit. Maybe they have a. Do they have a credit card? I don't know. But okay, here we go. So it's gift cards and credit cards. Okay. Offers its own. Okay, so they have their own credit card. So that's probably what these accounts receivables are. Um, Company estimated customer credit loss of 578,000. Oh God, for 12 months ended February 3rd, 2024. Uh, so looks like that's not good. So we could see that as mostly customers. So we could probably put. Let's just do. Okay, that. Okay, guys, I'm just doing a calculation over here for that exact one. Merchandise inventories. Let's see. Let's see if they list these inventories. Sometimes they do. Sometimes they don't. I mean, I'm pretty sure. Okay, let me see exactly what this company is. So I could. I'm pretty sure it's a clothing company. Okay, we do not want SEC. Okay. Alrighty. It looks like it's all right. Looks like it's a clothing brand for. How do I put it? Bigger ones. Okay. All right. That's enough. All right. So now we got to figure out, well, what the hell is this merchandise? What is it? Come on, give me something here to work with. All right, I can't find it. So we're just gonna do a blanket. It looks like, you guys saw. It looks like it's for, bigger. Let's just call it, 40. Alrighty. Okay, here we go. So let's get the original. I'm gonna put this over here so y'all can see what's going on. Alrighty, so this is gonna be obviously the rate we just got. So we got already 9 through May, so that got rid of like 50 May. Okay, now let's do. I'm gonna put this over here. Now we need to get the long-term assets. I think. Let's see. Rights of use assets. How many? So it looks like they have no. Do they have any long-term life? They only have. Huh. They don't really have any liabilities. Okay, I'm getting sidetracked. All right. Or I mean, they don't. They have liabilities, but it's not like um long-term liability. Long-term liability. So I don't know. Let's get this. PP&E. Deferred income taxes. 0. Okay. Other assets. Right of use assets. Alrighty. So we got property, plant, equipment of 64 million. 64,022. Deferred income taxes, we have 0. 25,047. And 154. 686. Alrighty. Now let's get the total liabilities. And we just want to do. So we got total current liabilities. So these are liabilities that will have to be paid off in a year. We have 188,008. And then we have other non-current. So these will be your long-term. Non-current of 14,475. And then we have lease liability. Okay. Which lease liability. Okay. And that is 92,013,000. Okay. Let's sum that up. Alrighty. Alright, so we have all the numbers on the screen now. So let's go total assets. Okay, I didn't put an S, it's bothering me. What's that? Okay, let's get these done. Okay. Oh, what am I doing? I already did that. Sorry, guys. Hold on. Okay. Alright, I had a problem. So this is our fair value with the things that we've done so far. This is the liquidation value of the company. So let's go to the shares outstanding. And guys, just remember when I'm doing this is that like this is just a quick analysis, because if I really went into this, these videos would be super long. And with this thing I'm using, it only allows me to record for about 30 minutes. So if you want longer videos, just put it in the comments. Let's see. Shares outstanding. And I think there's something with this company too, where the what's it called? I think it's the founder's son. I think it is, and I think he owns I think it's the Class B shares, in which that's all the voting shares. He owns. Okay, so we want to do. He owns mostly all those the shares that you could vote. That has the voting rights. Alrighty, guys. So that's the fair value. What was it trading? I think it was like 520 or something. Okay, 533. It's on a run today. What was it? 5.33. So that's what it is right now. So there's some upside involved. I mean, I've been looking at this thing. I've been waiting for it to get down to like the $4 area. They do have earnings coming up, which could be bad, but go to the bathroom. But I think if this stock, if you could get $4 a share, it has earnings coming up, and they did just start losing. I think last quarter they lost 23 million. I honestly don't remember if it was a some sort of write-off, asset impairment or something like that. I have no idea. But from this analysis, we could see that it's worth about $7.37. Liquidation value was some pretty good. I mean, I like that they're doing, investing in corporate bonds and stuff like that. Get a return on that cash. The only thing I'm worried about is that dividend. I think I'm waiting for the stock to drop the dividend. I think when they drop the dividend, I think the stock is going to drop like 20%, and I think we could easily get to this $4 share price. I mean, hopefully this earnings they have coming up absolutely tanks it. And if you could get about if this thing gets down to about $4 a share, which I think it could. I think that I think they're going to end up getting rid of the dividend. I really think so. I think they could pay it if they wanted to, but I think that there's going to be a point where they will get rid of it, because it's. I think I think it was like 13%. What's the dividend yield? Let me see again. Yeah, 13% dividend yield. I think they need to get rid of that, especially with the company losing money. You should not be paying dividends when your business is losing money. But I think they're going to drop this, and I think when it does, I think we could easily see this price. It might even be lower than that. They do have earnings coming up, so I'm going to guess it might be then. But I wouldn't surprise me if. So I'm kind of hoping that it does have bad earnings, so I could get into this one, because it really interests me. I like this stock, but and there is some risk with this one too. I mean, the risk is that I think what I was trying to say earlier is that there's Class A and then there's Class B, and the Class B are the voting shares, and I think the founder's son owns 50. I think 1%. I mean, he owns more than 50%, so he has full control of those Class B shares. So he basically has control of this company. Um, so that's a risk. I mean, looking into it, it's kind of like this guy might be. Is he an idiot? Is the question. I have no idea. I'd have to go look. But if he's paying a 13% dividend and the company's losing money, um, it seems pretty stupid. So I don't know. That's a risk too with management. I don't sometimes management. I don't really care, like especially for commodity companies because like you most of the time, like same with oil, it's like there's oil on the ground. All we need to do is get the oil out of the ground at a uh, lower cost than we drill for and then sell it for profit. There's not much brain power needed for some commodity companies, and that goes for mining too. But with these kind of stocks like Cato, it's a brand. There's a lot of things that goes into it. So I mean, it looks interesting. I think put it on your watch list, and it could be a home run. That's what we're looking for. We're looking for stocks that could double, and this could be one of them if it gets to the right price. All right, guys. I hope you like this video. Please like and subscribe. I'm getting like one view, and the one view is myself. So so please like and subscribe if you're watching this. Um, and I have a lot of stocks planned for analysis. So please like and subscribe.